Yesterday's decision by the European Central Bank to cut its deposit rate by 25 basis points to 3.5 was widely expected. However, ECB President Christine Lagarde said that the regulator's future policy moves remain uncertain and will depend on incoming economic indicators. She noted that inflation is steadily heading back to the 2% target. However, the ECB chief expressed concerns about services price growth, which could push inflation higher, and economic expansion rates, which have been rather sluggish lately. At the same time, Lagarde stressed that the ECB is poised to continue its cycle of interest rate cuts, but provided no clues as how many times and how deep the regulator is going to lower them. Against this background, the volume of long euro positions increased. After all, there are no factors that could drag the European currency down. Traders are now awaiting the policy meeting of the US Federal Reserve and the Bank of England. The regulators are expected to cut interest rates as well, but their further policy steps are still unknown. This in turn supported risky assets, with the euro and the British pound gaining strong upside momentum. Yesterday's data on US initial jobless claims was disappointing, coming in well above consensus estimates. Meanwhile, US producer prices continued to cool overall in August, showing that inflation is improving across the economy. This led to a weaker dollar, thus contributing to a rally in the euro and the pound sterling. Now let's take a look at the 2 days macroeconomic calendar. It includes Eurozone industrial production data, the Eurogroup meeting, UK inflation expectations, and an interest rate buy decisions by Russia's central bank. As for US statistics, the University of Michigan will release its readings on consumer sentiment, inflation expectations, and current conditions, but they are unlikely to have a major impact on market dynamics. If the euro fails to gain strong upside momentum after today's European data, the market is likely to see a strong correction at the end of the week. From a technical perspective, the 1-hour EUR/USD chart shows that a false breakout at 1.1091 will generate a sell signal, dragging the euro down to 1.1072. If the price breaks below this level, the pair is likely to dive to 1.1052 and 1029. After all, yesterday's steep bullish move raises many questions. I doubt the buyers will continue to push the euro higher. A bull case scenario is possible if the price breaks through and consolidates above 1.1091 or forms a false breakout at 1.1072. This will lead to an increase in the volume of long positions, with the European currency extended gains to 1.1119 and probably 1.1148. At this level, I recommend going short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.1119 and 1.1091 can only be considered after a false breakout. Going long will be irrelevant at 1.1052 or a false breakout at 1.1029 on the rebound in anticipation of a 25-30 pip correction. Speaking of the British pound, a rise followed by a false breakout at 1.3168 will generate strong sell signal that will take sterling down to 1.3137. If the price breaks through this level and tests it from below, the pound-dollar pair is likely to fall to 1.3105 and then head towards 1.3075. At this mark, it would be a wise decision to go long on a rebound, expecting an intraday correction of 25-30 pips. Long positions at the 1.3137 and 3105 levels can only be opened on the false breakout. Alternatively, if the price breaches 1.3168 and consolidates above this level, the British pound is expected to climb to 1.3197 or even 1.3233. At this level, I would recommend going short on the rebound, counting on a 25-30 pip move. Going short at 1.3197 and 3168 will only be relevant in case of a false breakout. Good luck and have a nice weekend.